So is this more related to the cattle on feed report? Is it related to nervousness about the outside markets or geopolitical events? What is it?
I think it's a combination of things. Obviously, the cattle on feed report wasn't anything to write home about. And then you've got the outside markets flushing out in the early morning trade. And that's got the risk off sentiment, reaching across the cattle complex. I think this could be setting up for a buying opportunity, though, especially if we see the outside market settle down. Right here against the 100-day moving average for April live cattle, that comes in near 140. And we're also looking at a seasonally bullish time of year for the June contract that starts in about a week and a half. So we welcome this pullback as a buying opportunity, but really want to see these outside markets stabilize to feel a little bit more comfortable about being more aggressive on the long side from these levels. Now, the lean hog market is really what's been the outperformer here as of late, which seems like a rarity to say, because usually lean hogs have been the anchor, it seems, for a large portion of the last year. But they've had an incredible run here over the last week, and they're holding well today with despite all the weakness in the outside markets. We are a little bit overextended to the upside. The RSI is in overbought territory with the reading above 70, so I wouldn't be surprised to see the market cool off, maybe retreat back to that 90 handle for the April contract. But if we can pull back and stabilize there, we'll mark higher lows, potentially be taking us to higher highs in the near future.
Where do you see most of the action? Are you looking mainly at that April contract right now?
The April contract is where we're focusing a lot of our attention and kind of trading around some core positions with clients. I think that's going to be where a lot of the liquidity is here for the time being.
So it's currently trading 7 cents lower. We're at 94.87. Not too much going on there. The nearby February contract under more pressure. Still a $20 premium, though, in those summer months.
Yeah, absolutely. And it's I wouldn't be surprised to see it continue to climb. Like I said, we think the market's a little bit overextended here in the near term. We welcome a pullback, but all in all, the chart and the fundamentals, I think, remain constructive so long as we can defend $90 on that April contract and we can kind of stair step higher. What I'm concerned about is the market going too far too fast, because we all know how that ends, and it usually doesn't end well.
Well, good point. I'm glad you brought that up. Thanks, Oliver. Appreciate it. Good luck on this Monday. Oliver Sloup of Blue Line Futures.